Welcome to our weekly roundup of key business developments in Sri Lanka. I'm Nishani Figuera. Let's first take a look at the top stories for this week. Korea to resume project funding. Policy rates to be held in 2024, says Bloomberg. And offshore banking regulations within Port City Colombo gazetted. In our main story this week, the Export-Import Bank of Korea decided to resume their concessional project funding to Sri Lanka. The resumption comes after the official creditor committee and Sri Lanka finalized the Memorandum of Understanding on Sri Lanka's debt restructuring. This decision includes resuming disbursements, signing loan agreements and moving forward with the bidding process for all ongoing Economic Development Corporation Fund projects in Sri Lanka, including the Ruwanwela water supply project. Since 1990, the EDFC has authorized nearly $1 billion for 30 development projects in Sri Lanka. Last week, Japan announced that it would immediately disperse funds on its halted yen loan projects in Sri Lanka. Japan has committed about $1.1 billion for power, healthcare, rural infrastructure, and an airport terminal in the country. According to Bloomberg Economics, Sri Lanka's central bank will hold its policy rates for the rest of 2024, noting the uncertainty surrounding the presidential elections that will likely put pressure on the rupee. There are two policy rate review meetings scheduled for September and November. Last week, rates were cut by 25 basis points. The research agency added that it sees lowering of lending and deposit rates to 8% and 7% respectively next year. Meanwhile, inflation in the Colombo district rose 2.4% in July from a year ago, higher than 1.7% recorded in June, as the favorable base effects are dissipating. Food inflation accelerated marginally to 1.5%, whilst non-food inflation rose 2.8%. Last week, the central bank expressed confidence that the risks to inflation in the medium term are evenly balanced in the absence of drastic events. Therefore, it maintained its 5% medium-term inflation target despite a 25 basis points cut in rates last week. A delegation from the International Monetary Fund was in Sri Lanka this week to discuss the country's current economic situation and recommend future actions to strengthen the economy. Speaking to the media, State Minister of Finance Shehan Semasinga clarified that these discussions are not related to the third IMF review, but will focus on the country's economic progress and future actions to be taken to strengthen the economy. Sri Lanka is awaiting the assessment from the IMF on the compliance of an in-principle private creditor restructuring deal on their debt sustainability assessment. Offshore banking regulations within the Port City Colombo was gazetted, allowing the special economic zone to become a major financial hub. Regulations allow commercial entities to engage in transactions in any designated foreign currency with any other offshore unit or non-resident, accept deposits from any authorized person or a non-resident, borrow and engage in other transactions as authorized by the Colombo Port Economic Commission with the concurrence of the Central Bank of Sri Lanka. According to Shehan Semasinga, State Minister of Finance, permission for import of vehicles will be granted in the month of August, starting with the import of vehicles required for business and transportation at the initial stage. John Keo's Holdings announced a 1-for-10 rights issue at 160 rupees a share to raise over 24 billion rupees. A subdivision of shares of 1:10 is to follow. The company said that funding will support financial obligations, which had increased due to the higher than anticipated equity funding required for one of its flagship development projects. In our weekly tourism update, during the first 28 days of July, just over 170,000 tourists arrived in the country. In the year, over 1.18 million tourists have arrived. Daily arrivals were 6,095 during the month, significantly up from 3,782 recorded in June. India continued to be the primary source market, followed by the United Kingdom and China. The all-share price index at the Colombo Stock Exchange fell this week on uncertainties surrounding presidential elections. The index is now at 4-month low. The Treasury bill auction held on Wednesday, yields on all maturities were unchanged, arresting a 3-week decline. Bids amounting to 335 billion rupees were received, of which 126 billion were accepted. The Sri Lankan rupee was slightly stronger against the dollar this week, with the central bank's indicative mid-spot rate ranging around 302 to 303 rupees. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for regular updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.